In today's accounting session, we would be discussing the objectives of accounting. As a part of this session's discussion, we would be discussing what are the objectives of accounting, or we will try and gauge and see why does a business need accounting? Why is it mandatory for a business to have accounting and accounting practices in place? Now, you have to remember, it's because that a business needs accounting that a business has to hire an accounting professional. It's because a business has to carry out the accounting practices that they are forced to have a finance department, they're forced to have an accounts department to look into these aspects. Also, by law, okay, so as a part of statutory compliance of any registered company, it is mandatory for them to keep their books of accounts. Any registered company, it is mandatory for them to maintain their books of accounts. And it is also mandatory for the company to have their books of accounts audited at the end of the financial year by a certified or a qualified professional, and what we call as chartered accountants or CAs. They have to get their books of accounts audited by a chartered accountant. And in the case of certain types of firms who have who have income beyond a certain level, they are subjected to what is called a scrutiny. These firms would be subjected to what would be called as scrutiny. So this is the reason why a business, we would be looking at the reasons why a business needs to have accounting practices. Now, the first reason why a business needs accounting is because someone has to keep a systematic record of the transaction. Previous session, we had discussed the concept of transaction. So we saw that transaction is a economic activity. There's exchange that is taking place. The seller has goods to offer, will collect the payment. Buyer has money to offer, will collect the good or service. So this interaction has to be facilitated by the business. Now, someone has to keep a record of transaction. So I'm pretty sure prior to the lockdown, some of us, when we go out for shopping, or let's say we walk into a supermarket, we would walk around with a trolley, we would pick up all the things that we would need, and then we would finally reach the cash counter. At the cash counter, the cashier or the person who's there at the counter would pick up, he would start scanning the barcodes, and they would total up, and then in the end they would tell you X and X is the amount, total amount. You would make the payment. As soon as the payment is done, the person will generate a receipt and then will stamp, will seal it, and will give it over to you. But why is that person doing that? Okay, why is it so necessary to do that? Okay, or some of us may have some experience shopping online through Amazon or maybe Flipkart. Now, what would happen is we would place the order, we may go for a cash on delivery, or we may go for prepaid delivery. We would make the payment, the delivery person would come, they would deliver the good for us, and then within 24 hours, the e-commerce company, be it Amazon or Flipkart, they would send us an invoice. Now, why is the business doing all this? It is because someone has to keep a systematic record of transaction. Someone has to make a note of the transactions that are carried out by the business. Someone has to keep a record of the transaction. They have to keep the details of the transaction. How many goods were sold? What was the payment that was collected? In what form was the payment collected? Was the payment collected in the form of cash, or was it in the form of credit card? What was the discount given? So all these details has to be captured. So the primary objective of accounting is to keep a systematic record of the transactions that are carried out by the business. Someone has to keep a record of the transaction, and that responsibility is undertaken by accounting department. Now, I'll give you another example. There is a website which is called as IRCTC. Okay, or it stands for Indian Railway Catering and Tourism Corporation. They are responsible, it is a subsidiary company of the Railway Ministries, and they are responsible for providing, one of the features or one of the facilities that they provide is that they give us the ability to go ahead and then book tickets online. Okay, they would give us the ability to go ahead and then book tickets online. So now IRCTC has a Guinness record. Okay, IRCTC has a Guinness record. They the record that they hold is that a website that handles maximum number of transactions any given day. Okay? It has the record of the website that handles the highest number of transactions. So IRCTC, prior to the lockdown, on an average every day they would clock around 25 lakh transactions. Okay. So on an average every day they would clock around 25 lakh transactions. So you understand the volume of transactions that are taking place. Okay, so for example, Flipkart, they're planning to come up with a billion-day sale, or Amazon earlier this month they had what is called as the Prime sale. So different portals, different businesses, they have different types of transactions. The volumes of transaction would be varying, and because of the volume of transaction, it is mandatory. It is essential for them to have someone who would be responsible for handling these volumes of transaction. So the primary objective or the primary responsibility of the accounting department is to keep a systematic record of the transactions that are carried out. They have to keep a record of the transactions that have been carried out. Now, second reason why a business would need accounting is that determine profitability based on incomes and expenses. So previously we had discussed when we discussed terminologies, we had spoken about incomes, we spoke about expenses. So income is where the company would be generating inflow. There was inflow of cash, or cash is coming into the business. Then you have expenses. What are expenses? Expenses are where there is outflow of cash. Okay, so I'll maybe give you an example from our day-to-day life. Back at home, Dada would go for work. Dada would be working maybe at a business, or he would be working at a firm. Beginning of the month, he would get a salary, and then salary is income for Dada. And then depending on his salary, he would try and meet the expenses at our home. We may need groceries, we may need vegetables, we may need gadgets, we may need other essential items. So based on all this, Dada would try and manage the expenses at home. So what is Dada trying to do over there? For Dada, salary is an income, and then the expenses are trying to pay for vegetables, trying to pay for groceries, trying to pay for essentials. So these are expenses that Dada has to incur. So Dada will have to try and balance these two. Now, what happens if your expenses ends up being more than your incomes? You would go bankrupt eventually. Or what happens if you do not ensure that your expenses are within the limit of your income? So that would not be something which is very favorable. So we had also learned profit is when the income is more than the expenses of the company. Income is a profitability is a condition where the income of the firm is way above the expenses of the firm. That is when we say the firm is profitable. So the objective of every business is to be profitable. To earn profit is what they exist for. Okay, to earn profit, that is what they exist for. So how do you know if the business is running on profit or not? So someone has to compare the income, someone has to compare that with the expenses, and then estimate, is the company running on profit or is the company running on losses? So this determination, balancing between the income and the expenses of the firm is managed by the accounting department again. So this is the next objective of the accounting department. Then the last objective, the reason as to why the business would need accounting is that determine the financial position of a firm in terms of its assets and liabilities. Okay, determine the financial position of a firm in terms of its assets and liability. So yes, previous session when we discussed, we had learned the concept of financial position. Okay, we had learned the concept of financial we had learned the concept of assets and liabilities. We saw that assets are resources that are needed by a business. Okay? They are materials that are needed by a business to function smoothly. And we had discussed some examples as well. We saw land, we saw machinery, we saw furniture, we saw raw materials, stock. All these are examples of assets. Now, for a company to function smoothly, they would need assets. Okay, for a company to function smoothly, they would need assets. So without assets, they cannot function properly. Okay, so imagine a company does not have a building. If a company does not have a building, how will it function? Or the company does not have machinery, the company cannot function. So without assets, a company cannot function. At the same time, the company may have some obligations as well. The company may have some commitments as well. There may be scenarios where the company may have to, pay money to others, or they have to fulfill money to others. So you have to balance the resources that you have, and then you have to balance the obligations that you have. There has to be a balance between these two. Okay, so you cannot go ahead and then take too much of obligation. So for example, imagine I walk into a bank nearby and ask them for a loan of 10 crores. Now a loan of 10 crores is something that I would not be able to afford. So basically, what are we trying to do over here? I'm trying to see if that obligation is something that I can fulfill. So likewise, in a firm, in a business, there has to be a balance between the assets and the liabilities that are owned by it. Okay? This is again managed by the accounting department. Okay? So there are three important objectives as to why a business needs accounting. The first is that they would need, someone has to keep a systematic record of the transactions. When we look upon the accounting process, you would see that the accounting department will record the transactions as and when they take place in the chronological order. The second reason why the business needs accounting is because you have to determine your profitability based on your incomes and expenses. Okay, someone has to estimate your incomes and expenses, compare your incomes and expenses, and determine, are you running on profit or are you running on loss? If at all you're running on loss, then you have to try and increase your income. The third reason why a business would need accounting is because you have to estimate the financial position. You have to try and compare the assets and liabilities of a firm. You have to always ensure that there's a balance between the assets and liabilities of a firm. Now, these are some of the reasons as to why a business needs to have accounting.